So this is the fair value of the gold. Everything above this particular line indicates bubble, and when the bubble bursts, a lot of people will be left holding the bag, trying to calculate or capitulate or write off their losses. Pay very close attention. Very few people understand this. What you see over here is the monthly chart of gold. This allows us to see the actual perfection of the price move, sentiment, and market cycles. Compare the price move of the gold to the overall market, to the crypto market, so you understand how they are moving in or off alignment. Very importantly, the current fair value of the gold without the bubble current evaluation sits at around $2,000. So everything at $2,000, it's a fair value. It provides higher security, right? Meaning everything above it, obviously, it's a bubble. When you look at the chart, you will understand that the gold has been hitting this fair value gap for many years, and there was no particular reason for artificial inflation of the price. When did the price broke the $2,000 per gold? Well, it happens during the Russia-Ukraine war, and this is the only reason where while we have this bubble actually inflated, because people starting from Russia started buying gold for the one reason and one reason only. After the US government imposed sanctions to Russia for starting the war with Ukraine, other countries realized that, if you invest your government funds into US treasuries, your assets could be frozen and you essentially have no access to this capital. You cannot use it. So it's unusable. Same thing happens now with the crypto market. A lot of wallets are actually frozen with particular holdings of coins. So regardless, you might be a millionaire on your crypto wallet, but if you cannot sell, well, you're out of luck. This was the moment when the new bubble was created and the new bubble was inflated. So Russia purchased a lot of gold and starts stacking up a lot of gold for their own purpose and need. They didn't really wanted to pump the price of the gold, because think about it. If you need to buy more gold, you want to buy it cheap. You want to buy it quietly. You don't want to push the prices higher. And this is why a lot of people misunderstood the concept over here. Countries were buying it not because they find it more valuable, but they find it as a safe haven where they can actually store the local currency and hold the local currency's value, because other countries' currencies are not as strong or stable as dollar. A lot of people trying to mock up the dollar that is losing value due to the money printer or inflation. But remember, other countries are fighting with devaluation. Their local currency is worthless in general, with or without printing money. So the other countries have to fight not only restriction, potential sanctions, freeze of their assets, but they also have to fight local weak economies and local currency devaluation. This is why I pull up a chart that very few people understand. That they can actually go so much back in the past and look at where is the fair value. And on trading terms, you always can find a fair value, a particular asset, just using the RSI index, where you have overbought, oversold, and you have in the middle, which is fair value, which finds a perfect balance of all market participants who are bullish and bearish. They place, based on market sentiment, the fair price of the asset, where the asset, should usually trade, no above, no below. This is what we're seeing over here with the gold. And if you look at, there have been many different positive catalysts for the gold, right? That are specifically related to the gold and gold industry and precious metals. This is why we saw this top of around $2,000 was hit 3 times, in fact 4 times. We had 4 different tops of $2,000. And this is simple indication that people were interested. The first top we had at 2011. So at 2011 it hit 2000, then it pulled all the way down the levels of 1300. So from 2000 to 1300. Why? Because people took profits. There was no particular reason for you to hold gold for the long run. It was a quick swing trade. Then we had all the way up to the virus situation until 2018, 2019. Again, there was artificial sentiment push because the market was crashing during COVID. the economies were closing, and again, people panic, and when people don't know what to do, they buy gold or silver. This was the second time when the gold pushed to 2000, and people were so hyped. I remember this very well. But because, like I said, people who were buying it, they were speculators. They were not people who were actually into this market. So then, if you look at over here in 2021, they sold most of it. So everything that pushed up the gold prices actually was dumped again on the market for the same reason, speculators. Because then the Bitcoin pumped, we had 63,000 new all-times high, and then the markets kind of dumped. Remember 2022, everything again dumped. Was one of the worst crypto bear markets. And then look at what happened in 2022. We had again gold pushes back up to the same levels of 2000. So this was the triple top pattern. A lot of people then were kind of wondering, okay, 3 times the gold hits 2000, cannot break above, something is happening. Again, why is that? Because the same people who previously go in and out for the same reason of either the market is crashing, something bad is happening, or I don't really know what to do, I'm just gonna stay safe, I'm gonna park the money into the gold and silver. There were no new money coming in. The countries were chilling. Russia was not buying, China was not buying, everyone was just chilling. But then look at what happened on the 4th try. Again, when was that? Elections, right? The elections reappear in, this is in 2020, I think it's 2024. The Russia-Ukraine war appeared, right? This is the end of the mandate of Joe Biden, and Russia actually invaded Ukraine, and the market kind of crashed, not so much, but a lot of people were not, pretty sure what they're gonna do next. Crypto didn't react in any way. First of all, there were speculations that they're gonna the Russia and Ukraine, they're gonna be using crypto for transactions to receive donations, to raise money for the war itself. But then people actually pointed out something very interesting, is that they actually start stacking up gold, and then China follow suit. They also start stacking up gold, and then we saw little by little countries around the world, big countries with local economic issues, BRICS countries, they start also stacking up gold. This is the moment when you saw this crazy push bubble, and I'm calling it a bubble because this is institutions and countries buying the gold, which means is that if you as an individual, buying at these levels, hoping to make quick profit, yes, it's possible. But think about if these countries simply decide not to own it. So all this crazy run up could go that easy, that big on the downward trajectory, because all this gold price comes from the gold purchases, right? And this we're talking about the actual sentiment, because a lot of the countries were purchasing the physical gold, which sure, it helps the actual spot prices, but this is not really what drives the prices, because the sentiment changes very fast. They cannot dump 3 tons of gold on the open market, or simply liquidate it. But the main idea here is that the sentiment changes faster than the price. It's not price changes and then sentiment changes. The price follows the sentiment, and sentiment changes very fast. So this is why you need to understand that everything above this level presents a substantial risk. This most likely will play out in a negative way. The question is when, and the question is, will institutional investors be able to kind of avert this particular crash? Because sure, they might be buying the dip, but which dip you're buying when gold falls from 5,000 down to 2,000, right? That's the biggest question over here.